Welcome to a special edition, Dan, of the On the Tape podcast. Now, we're down here in Florida, in Naples.
GFLC. This is a CME Global Financial Leadership Conference.
Yeah, I have
do
trouble
we
with
have
that
one
for
of those?
some
Do we
reason.
have one of those leaders here with us?
Well, it's interesting because
Yeah.
we were waltzing around
Yeah.
on Monday,
Yeah, we were.
and we ran into Steve Quirk. Steve is the chief brokerage officer of Robinhood. He's a gentleman, and he's a friend. We last saw Steve at the Robinhood conference that we were attended with 700 other people, which was an unbelievable success.
Yeah,
Dan.
it was. Steve, welcome to the
and,
pod.
And by the way, they, as I told you guys earlier, the feedback that we got from our best customers was amazing about all the things you were helping them
Well,
with.
we did some fun stuff really quickly. So this is a new partnership for us, and obviously a lot of these listeners know on Market Call we've been actually featuring their new product, which is Legend, and they introduced that at the Investor Summit about a month ago, and we've been using it, and it's a great, great product. We'll get to that a little bit, but one of the things, and Guy and I just wanted to give a quick impression, because that event, I think a lot of folks like kind of think about Robinhood and they think about a product that, a lot of folks were using, let's say 3 or 4 years ago when crypto was going crazy and meme stocks. And I think one of the things that Guy and I have learned over the last, call it 6 to 9 months, as we've spent a lot more time together, that is not what this product is anymore. And I think Legend cements that going forward. Talk a little bit about that transition. You've been there for like 3 years or so right now, and transition from a product and a service standpoint.
Yeah, I think, by the way, I came from the world of Thinkorswim, acquired by TD Ameritrade, acquired by Schwab. So I've worked at all three of those. And listen, my impression of Robinhood was the same. Like, I thought it was a bunch of young kids. And by the way, it kind of was a bunch of young kids because I always like to joke. The people say, how did you get to Robinhood? And I said, I'm a finance dad, annoying finance father. My girls are all in their early 20s getting jobs, and I'm like, you need to make your money work as hard as you work for your money. And finally, they relented and opened brokerage accounts. And so they come up to me one day and they show, hey, yay, we opened it. Can you help me? And I'm like, that's blanking Robinhood. I work for Schwab. And they're like, well, we're going to do this the way all of our friends and all our relatives are doing it at our age. And I'm like, okay, touche. I said, I got to get on the train with the next generation of investors. But these investors are growing up.
Yeah.
So their needs are growing up. So the things that we didn't have, retirement accounts, a yield product, like a more sophisticated app, those are all the things that they have to come, for these customers to graduate to whatever phase they want to get to in their investing.
Well, the company grew up as well, and I'll be the first to say, and I'm on record as saying it, when the company went public, Melissa asked me a question about it. I said, the most interesting thing about Robinhood is the name and the hair. And that was true for a while. But with that said, the maturation process of the company over the last 18 months specifically has been something to behold. And it's, what do they call when you bury the lead, Dan?
You call burying the lead.
They do say that?
Yeah, that's what they say.
Well, the lead today being Tuesday, is this deal with Trade PMR. So that basically got you another $40 billion of assets under custody, and I think it costs about $300 million. So you're up to $200 billion of assets under custody now, and you've got yourselves in this whole new sort of business. Like, there's an evolution going here. This is on the heels of, I think it's called Bitstamp a couple months ago. So you guys are making some moves here. So talk about the importance of this move.
Sure. I would say, so if you think about Robinhood and what Robinhood had been known for and where Robinhood really excelled, I don't think anybody will question Robinhood's ability to bring, 24, almost 25 million net new customers into the market. And so we saw the statistics that came out of the government, 58% of U.S. households are now investing in the market. We're the envy of the world. It's in the teens or 20s across the globe. And they call it the Robinhood effect, which is amazing. But let's cut the world in half and say half of the people are confident enough to manage money on their own or want or have the time to do it on their own. And half the world says, I would like some or complete assistance. We were only catering to half. And so we didn't even have an offering or anything that would let us. A lot of people want all of their investable assets in one place. It's a lot easier to manage them. We were forcing them to have to go somewhere else if they wanted financial advice. And we've been told loud and clear, like, if you would just get this capability, we would love to keep it all here or even bring more over here. And so this is something we've been looking at for quite a while. And we wanted to find some, look, we knew that we needed to jumpstep this a couple ways. We just don't have the expertise or, the experience in this area that Rob and his team do. And, quite frankly, it's really a duopoly now. There's Schwab and there's Fidelity, and then a couple smaller players. And, having somebody who can scale and compete and give these advisors an alternative is something they're looking for, but it's something our customers are looking for as well.
It's pretty fascinating. So you said almost 25 million funded accounts. And think about that. There's 330 million people in America. Okay. So you think about how many of them are old enough to actually have a brokerage account. So this is something, the Robinhood effect is real. I think Guy and I both underappreciated it a little bit maybe 4 years ago. Not that we were like condescending to what was going on the platform, but when you thought about the tools and the services that some of the companies that you worked at over the years, it seemed like, wait, why would you use this app when you could have a desktop product and all that sort of stuff? And I know you guys spent a lot of time doing that. So then come back to Legend. Well, you guys have both now. You know what I mean?
Right.
And so that's why I think this deal is really interesting. All right. One thing that stuck out to me in the press release when I was reading it this morning, okay? So this is in the segment saying serving investors across all generations. We just talked a little bit about how you went upstream on the investable, for the age, right? Total investable assets held by millennials is expected to grow over the next 2 decades with an estimated 84 trillion wealth transfer on the horizon. Today, Robinhood has more than 24 million funded customer accounts, about 75% of which are millennials and Gen Z.
This is what makes this such a perfect marriage. If you go talk, and Rob talks about this, and he's talking about it today in the media. If you go talk to those advisors, their concern is they have the wealth of the older generation, but they know what happens. This is a statistic that sits out there. Anybody can find it. I think it's like 75% of people, when there is a wealth transfer, they dump their advisor.
That's right.
Yep. And so they're all very keenly aware of that, and they want to tap into the next generation, the recipient of that wealth transfer, and also the ones who are, if I'm 31 years old and I'm investing, look, a lot of my wealth is going to be accumulated going forward. I'm in my prime earning season right now. So I think between those two things, having the ability to tap into, as you said, 75% of our customers are the younger generation. 75% of their customers are in that generation. So we're going to create a referral program that's going to feed these advisors these customers. We have many customers that say, I would like advice, I'd love some help. And now we're going to say, hey, we can match you with somebody that I think would be very helpful to you. And, that's a boon for both our customers, but it's a boon for the advisors as well.
Well, I mean, Vlad spoke glowingly about the trade PMR RIAs, saying some of the best in the industry. And again, this sets you up extraordinarily well. I mean, you think about the timing of this, it makes a lot of sense. But as I mentioned earlier, this is now your third acquisition this year. The year's about to end, understanding, but that's pretty remarkable. And, if you think about it, the integration has actually gone really well. And my sense is this is going to be a pretty seamless integration as well. Can you speak to that?
Sure. I mean, the Trade PMR has an agreement, a 5-year agreement with Wells, so we'll largely keep them
At bay.
on their own.
Yeah.
From an infrastructure standpoint, the first thing we'll build very quickly is a referral program, because that's going to be the biggest benefit there on both sides, and then we'll slowly look to integrate components of it over time. But Rob and his team, he has a lot of people from the industry that have been really instrumental in building the technologies, and they have a great suite of technologies already, and building the capabilities that the next generation of investors are looking for. And they're attentive to their customers. That's one of the knocks that the larger firms get is, sure, if you are the largest customer, you get great attention, but if I'm one of the many others, maybe not so much.
All right, let's talk a little bit about the folks that were at the Investor Summit last month, because again, I think we just kind of intimated a little bit, we were expecting maybe something different. Guy and I spoke to dozens and dozens over like 2 days of the folks there. Not only are they super jazzed up about the product that they are using, and then the fact that you guys have these IRA matches, and there's a whole host of other things. I think people were super geeked up about this gold card that you guys were launching here a little bit. But let's get a sense from you, and we talked a lot about it at the summit. What's the kind of pulse of the retail investor right now? Because I think a lot of things have changed since then. With the election, we've seen a lot of different activity and a whole host of different risk assets. So just curious, in 2024, what do you think the state of a retail investor, one that could be active, because I know that you have all kinds on the platform, where are we right now? Because again, it seems like it feels like the industry is moving below the feet of some of those big incumbents right now.
Yeah, I think if you just listen to financial media and just pundits,
we don't listen to financial
media,
media,
in the industry, they would. There was a perception that what happened even before COVID, but it was especially that kind of accelerated by COVID was this whole retail blip in interest in the market. It's going to be a fad and go away. I never believed it. I really never did. I just think there's a larger percentage of people that are willing to do it on their own, and we're seeing that. But they also have optimism. So what I mean by optimism is you might not think the market is going to continue to rally. They of course have their own opinions, but they are finding ways to navigate any market. They don't need to have the market rally. They don't. If this asset class isn't rallying, guess what? They have access to this asset class. And we just try and provide them a vehicle where they can have both the capabilities and all the asset classes that they need.
Well, that's my final question to you is, historically, in a bull market, you're going to do really well. But your client base, in my instincts suggest, it doesn't matter what's going to happen. Now, obviously, it's a lot easier when things are going higher. But you're set up in a way, and people are educated themselves in a way where market volatility is going to play to your strength, not your weakness.
Yeah, I would totally agree. We're getting, and thanks to the things you and people like you do in educating customers, obviously when customers start out, they know the basics. They know how to get long the market. They know what they're interested in investing in. But as soon as they start to see some volatility or see a market which is more challenging, they have to learn how to navigate that. And that's really important because we all know markets are not always going to be, steadily rising, although they have been for quite some time. Yeah. So I think that's really beneficial. But I think the thing that's going to help them is, we continue to give them the education, but you got to give them the capabilities to do things. There are, a large percentage of our customers that just say, hey, you know what? I'm just going to park cash. I can get 4.5% till I feel more comfortable with this market. That's a decent yield. I'm doing, probably 10 times better than I'm going to do in a bank. And, as long as we can keep providing them an offering where they have alternatives and the ability to succeed in any market, I think it's going to be great.
All right, let's talk about some of those alternatives, because one of the things that I took away definitely from that audience, first of all, when Vlad and you were out there kind of, laying out Legend and all the capabilities, it seemed like there was a big focus on options because you were just made a platform that is really easy to trade them. On Market Call, we're using Legend on Tuesdays. People can see how we're navigating, how easily we're navigating. So it's not just options, though. It's obviously crypto. And then speak a little bit about the event contracts, because I traded one into the election. Yeah. I'm not going to tell you which side I picked there, but it was really, that was the first time I ever traded an event contract, and it was really done in a way where it felt like transacting in the financial markets.
I should tell you, we came up with that and put that together in 2 weeks. And we had a very large number. I think we publicized that it's over 500,000 customers traded them, and it's approaching 600 million contracts. It really, what it did was, it was really interesting because the evening of the election, 7 p.m. Eastern, states weren't called. The pivotal states were not called yet, but we saw the contracts go like this, 70-30, and then we saw Tesla, I think it was trading 274.
That's right.
Take off.
So
it took off, and we saw massive volumes because we allow people to trade 24/5. So the crypto space, Tesla, NVIDIA, all the things that there was a perception were going to be, doing much better as a result of Trump winning the election, started to move well before anything was called.
Yeah.
And so, like, and not to mention the election contracts themselves, but I think the aha moment for a lot of people was, listen, they just want to express, they want to be able to express themselves, hedge their portfolio, take advantage of opportunities with market moving news. They don't really care in what format it comes in.
Yeah. Talk about that overnight trading, because I think that was something that was a little controversial when you guys launched it. People were like, what does the volume and transparency look like? Like, what is the talking about hedging your portfolios? When Guy and I started in the business you started in the late 80s, I started in the late 90s, the portfolio manager that I worked for was trading the E-minis on Globex all night. And only institutions could do that. And only like a certain sophisticated institution could do that. So you introduce this overnight trading. I mean, what is the volume like and the transparency, that sort of thing? And are you seeing a pretty good uptake on that?
We have seen a really strong uptake. And I'm like you, started in the 80s, so I was like you. And you're right. When we were first introducing it, there were people that were skeptical. They said, oh, come on. I mean, the liquidity is not going to be there, et cetera, et cetera. But the way it's structured is it's limit order. And 70% of our customers, they do their homework and they do their education when the market's not open. And they're used to an e-commerce world. They're all new to brokerage, so they're like, that would be like Amazon closing. Why would Amazon ever close, right? If I want to buy stock ABC at $10, I don't really care if I buy it at 3 a.m. or 2 in the afternoon. Doesn't matter to me. So the idea was give them access, set them up to be able to transact whenever they want. And a lot of market-moving news doesn't happen during our waking hours. Election's a perfect example. Results from NVIDIA, they come out after the bell. There's a little after-hours activity, and then suddenly the analysts start talking, and there's guidance, and it moves. Or over a weekend. Some of our busiest nights are Sunday nights because all the news of the weekend builds up. So we'll have up to 10% of our trading, and we do a lot of trading. We're probably the second or third largest shop in the U.S. is happening.
So is that just customer to customer on your platform?
No, there's other market participants in there. There's actually quite a bit of overseas volume.
And are market makers emerging in this?
Yes, there are market makers that are in there. Which is
adding liquidity.
Yeah,
to your point.
Doug,
yes,
and his team are there.
Yep.
And by the way, one of the people I had to convince, and he will tell you that whenever you talk to him, you owe me, Quirk. I did that for you. And I'm like, I told you it was going to come, Doug.
You were right. Well, listen, Robinhood is fortunate to have you as their chief brokerage officer. We're fortunate to have you with us. And our relationship with Robinhood is just getting started, but we're really excited about that. So thanks, Steve, for joining us.
We're excited about it, too. So hopefully you'll hear a lot more from us with you guys.
Thank you.
Thank you.